Well, good afternoon, everyone. It's great to be here with you. The bell just sounded. The markets are closed after a down day, and not only a down day, but closing down near the bottom of the day. Kind of crazy, interesting stuff going on. So we'll have an interesting day today. I want to give a shout out to Eva and Scott and Kevin and Ted Barron. Welcome. Great to see you and David and everybody else. Jay Richardson, appreciate you taking some time out of your schedule to be here with me. This will be our class next week because the markets close early the day before Christmas. We won't be holding this class next week, just FYI, but we will be back on the 31st. I believe that's a full market day, so we should be here on the 31st of December. And so I'll have another announcement here at the end today just to go over some of our live event material. But want to give a shout out to Brent Moores. Brent Moores is there in the chat, veteran in the market, a good friend of mine. We've been golfing together, our day golfing. If we don't lose any golf balls, that's a good day for us. So we're that good at golfing. What I wanted to cover today is last week we talked about, how much of our profit are we willing to give back on a day like today or the last few days that the markets had. We may have wanted to make a decision differently than we did the day before. But the main objective for today is to go over our daily routine, just using the rule set that we have to see what, if anything, needs to be done with our open positions. Even with the market pulling back, there might be some stocks that are setting up for either a bounce off a potential support level, or that have already kind of a technically valid buy signal based on the rules that we're trading. So we're going to look at some of those today. We'll go through as much as we can, but before we get started, let's go ahead and take a look. Remind everyone our information today is for educational purposes, not a recommendation of any particular investment or investment strategy. We're going to be talking about stop orders today. There's no guarantee that the execution of a stop order will be at or near the stop price. It just triggers a market order. Remember that all investing involves risk, including the loss of principal. And, past performance is no guarantee of future success. So let me go ahead and jump into the Thinkorswim platform. I want to also, in addition to going over our daily routine today, is to show you some really kind of fun little tools or tricks in Thinkorswim. So I'll show those to you as we go through our activity today. So very first thing I wanted to show is here's our portfolio. Nothing's changed. We actually didn't get stopped out of anything today, which is kind of a miracle on some of these cases. But we wanted to look through, I think we have 15 open positions. A few of these we've kind of doubled up on where we've added to the position because the trends have been very strong. But one of the very first tricks on Thinkorswim that I want to show you is over here on the gadget side. Usually the default is that you'll have last, net change, and then bid and ask. And what you can see here is I've changed my one column here to percent change, which is the percent up or down for the day. To do that, you just click on this little gear, hit customize, and then you can go and search. And percent change, at least on my list, is just right here at the top, and I added that one by clicking the little add button down here at the bottom. And then I removed bid and ask, which, you just highlight that and then you click remove and it'll take it over there. But this is your active columns here on the right. Now, the reason that I did this is I just wanted to talk about this idea. If you click on the different column headers, you can sort, which is a cool feature. But I sorted by, biggest percent drawdown or decline today versus, going up. And so one of the things that I showed last week was how to create or get a watch list of your open positions. Now, you can do that by clicking on the watch list and then just click right up here at the very top. It'll say current account positions. Now, because I have kind of multiple groups in here, I didn't want to show everything on one watch list. So what I actually did is I just created a watch list of these open positions, and that's what we have here. So very kind of first observation, and again, I'll be asking some questions here. Love to have you chat in some answers and participate with me here. But how much was the S&P down today? So, chat that in. You can go take a quick look at, your different charts or whatever. We're going to look at them today actually as part of our daily routine. But an easy way that you can see that is you can actually just click here and type in the SPX symbol. And because I have them sorted by loss, you can see the SPX was actually down about 1.16%. So, you know what's going on in the markets. You've traded and invested a lot over the years. And so this may be new to some of you, maybe just review for everybody else. And so what we want to try to do is just take a little bit of a gut check. It was kind of funny. I was having a little chat with one of our viewers this morning, and when we look, or I guess it was this afternoon, when the market's down and we have a loss, or maybe even we realize a loss, we get stopped out of something, or we choose to close something down, sometimes that loss is hard to take, even though maybe it's a small loss within our acceptable risk parameters, which we've talked a lot about in the lesson series that we've had. I just want to do a little bit of a reality check. Here is what the stocks in our portfolio have done. AMD was down 5% today when the market was only down about 1%. We had a few, GILD, J&J, Walmart, and WFC, that were actually up today on the down market day. So, as your portfolio moves around, you're going to see some of these ups and downs, and you'll see prices fluctuate. And so if you go back and kind of visit, I think it was lesson 7, where we talked about how much to buy. Days like today is where that's really important, because not only is one trade going to be down, there are probably going to be multiple positions in your portfolio that are down. And if that loss that you're experiencing today is too great, then it becomes very challenging in order to take a new buy signal. And on days like today, or what we've seen in the market over the last little while, there might be some really good setups. In fact, I want to show you a couple that technical traders really like to see in this type of market. So let's jump into, first off, our daily routine. I'm going to go over here to the charts. I'm going to just close my left side menu down, and I have this grid chart. Now, I've chatted in there already into the chat, or if you go down into the description of the webcast today, there's a link, and I've shared this grid. It's a 2x2 grid, and it just has the major market indices in there. So we have the Dow Jones, the NASDAQ, the S&P, and the Russell 2000. All right. So here's kind of a cool trick. It took me a long time to learn this one, but when you have this grid chart, you can kind of go through, but sometimes it's a little hard to see. If you right click anywhere on the grid, go down here where it says maximize sell, and then it'll blow that cell up. And you think, well, great, where are my other cells? Here, this is the really cool part. See these arrows right here? So if you toggle or click the arrow, it'll toggle through your whole grid, which I'll show you in a minute. But the very first thing I want to do for our daily routine, part of your daily routine, in addition to looking at your open positions, is just to review what the market's doing. All right. Now, the Dow Jones, you can see, is coming off a brand new short-term high, and probably an all-time high, if I'm guessing right. But what's the market done the last 4 days, or the Dow? Well, it's gone down the last 4 days. So if your portfolio has been down the last few days also, that's probably just fine. And that was a hard lesson for me to learn. If the market was down, I wanted to be making money. If the market was up, I wanted to be making money. If the market was flat, I wanted to be making money. And there are ways to do that. We have a lot of webcasts that talk about different strategies. But when you just buy stock, if the market's coming down like this the last 4 days, there's a good chance that your portfolio, even the stocks that are doing well, might have been coming down a little bit. And that's where what we talked about last week, the great question, how much of the profit are we willing to risk in order to stay with the trend? All right. So the Dow, you can see here, has been, making a new high, pulling back. Now, those of you that have studied technical analysis a little bit, what type of pattern or price pattern is it when the stock makes new highs and then has about a 2 to 5 day pullback? What do we call that? You guys know the name of that price pattern? That price pattern is called a bull flag. Now, a bull flag typically is a bullish continuation pattern. Now, not 100% of the time, obviously, but what did we learn over the last, 7-8 weeks going through the lessons about old resistance? So I'm going to draw a little resistance line here on the Dow. You know, these last little short-term highs were here. We had some resistance back in that same neighborhood. But this area, technical traders will look for that area to hold as support. Now, we did close below that little line I drew, but it's an area. It's not a specific price point. All right. Now, the other thing is we look at the Dow Jones. I want you to kind of remember this chart, and let's toggle through the others. So if I go, I click my arrow and we pull up the SPX, what do you notice about the SPX that's a little different than the SP or the Dow Jones? Well, number one is the last high that we had on the SPX, the S&P 500, was actually back here in October. So we have not made a new high. Oops. We have not made a new high in the S&P 500 for about a month and a half. And so this one is trending much more sideways. And what happened today is we have the price actually closed below that 50-period moving average. Now, one of the things that's really interesting is you start looking at charts, and this is what a technical trader will typically do, is they'll start asking themselves, well, where could this pull back to next? And so what we look for are either moving averages, old levels of support and resistance. So I'm going to give you a kind of a heads up here. It wouldn't be unheard of, all right, and I know this is scary, for the market to pull back into this 6,550 area. Why? Because that's the old levels of support. Now, those of you that have done a lot of technical analysis might see, well, Scott, you missed this one. There's a little resistance right in here, right? This area, and that's kind of where we're trading at today. And write this down in your notes somewhere. Halfway through your channels, like if you draw a really solid channel that has resistance and support with usually multiple touches, halfway through the channel tends to be a potential support and resistance area. So little technical analysis nuggets you're getting today. But we see more weakness in the S&P 500 compared to the Dow Jones. If we toggle on over to the NASDAQ, similar things, right? The NASDAQ had the high back there about the same time the S&P 500 did. And this one didn't even come up near that old high. In fact, it kind of held this area right there for resistance. And where might this fall down to? Again, this is not guaranteed. It's just this is how technical traders think. When one level of support or area is broken, we just automatically look for the next areas. And right here, you can kind of see we had a lot of congestion in that neighborhood about 2420 or 24,200. So this would be another area that technical traders might watch for the NASDAQ to come down to. Now, obviously no guarantee that that will happen, but that's, again, a little bit scary, you know, if you have a bunch of positions that are on in the NASDAQ or the tech sector, right? Now, the last one is the Russell 2000. And this one you can see is shown a new high recently, very similar to what we saw in the Dow Jones, although this moving average hasn't trended quite as strongly as the Dow Jones had. Okay, so, but and I see a comment there from David. Let's bounce instead, as we've been talking about where things might go down to, right? So, you know, on the Russell, we had a lot of congestion in this neighborhood where it closed a little bit below that. So it'll be interesting to see if we stay below there. But as part of your daily routine, it's usually a good exercise to look through those 4 indices. And again, there's a link if you're watching the recording or if you're here with us live, there's a link or the code, that script code for this chart. And then if you want to go back to the grid chart, you can click this little kind of U-turn arrow and it'll pull those back for you. Okay, so just wanted to show you that the market posture, if you will, or the market trend, I think is still long-term bullish based on the technical analysis. We're seeing some weakness in the NASDAQ and the S&P because we're getting down below the 50-day moving average. We might see continued fall off there. All right, now what I want to do is go through our individual positions. I'm going to open this back up because these are the positions that we have. I'm just going to alphabetize them over here, just sort by the letter. And let's go through here. Hey, Will, let's go through here and just see what, if anything, needs to be done. Now I have my 6-month chart. We're using a 50 period moving average over here. We have a MACD histogram. The exit signal, if you're brand new today, you haven't been here before, the exit signal is when we get 2 red arrows. So you can see the little red arrows here and here on the MACD. That's the breakout signal. And you just turn that on in the edit studies window if you don't see those arrows on your chart. But when we get that 2 red arrow signal, the rule is to put your stop 3% below the low price on the day that it gives that second red arrow. And so most of what we look at today is going to have a stop in place already. And then, you know, once we adjust that stop, we don't lower the stop ever. We just move it up to where it's supposed to go based on the rule. And if we get stopped out, so be it. That's the purpose of the stop. All right. Now today on AMD, the stop here is at 196.91. The low today was 197.53. So we missed that stop by about 60 cents. And I want to teach you something here that I think is important. Okay. This is important to understand. Like when I first learned about stop orders and, you know, rules, I would see something like this and I'd say, you know, my stop's just going to get hit tomorrow. I'm going to go ahead and close it today. You guys ever done that? So if you're asking if I can share this screen, there's a link for this screen in the description as well. It's called the 2 green arrow chart. There's a link there in the description for this chart if you want to load it up as well. Okay, so but going back to the lesson that I learned here by hard knocks is when I started to see something give the 2 red arrows, I thought, you know what, it's just going to go hit my stop. And rather than lose another 3% on this, I'm just going to close it down right now. And boy, I don't know how many times, that I closed down a position early because I didn't want to, have it go down and hit my stop and lose that extra money. How many times is it given a red arrow like it did over here, and then it's much higher and the trend continued? So this rule that we have for this is to allow the trend to continue. If the trend continues, most of the time we're not going to get stopped out. But if the trend changes and we start making lower lows and lower highs, we're probably going to get stopped out, and that's the purpose of the stop. Now, what's cool about AMD is if we get stopped out here, we're going to be positive because, we're already up 188 bucks on this position on 4 shares. We got in this at 152 and our stop's at 196. So, from an investor or trader standpoint, yeah, sure, wish I got out here at 267, but I didn't know that was going to be the high. But I just don't have anything else to do. Hopefully, the market will be up again tomorrow and it won't hit my stop. But if it does, so be it, right? All right. Now, little comment here for me, that's when the dips open, stops me out, and has a big green day. Yeah, let me show you here on when we adjust a stop. I'll show you another technique in Thinkorswim that I think is really cool, Scott, that may help with that early morning volatility. It drives me crazy too. I hate getting picked off on my stops, but sometimes that happens. If you use a stop, that's going to happen to you sometimes. But I'll show you a technique that you can do to maybe mitigate that a little bit. And the trade-off is that you have to be willing to take a little bit more of a loss than where that stop is. But I'll show you that. All right, let's go ahead and finish going through these, and then I'm going to come back in. And I know we have one stop adjustment that needs to be made, and then there's a couple of these that are setting up for new buy signals, or that had, at least earlier today, I don't know if they still do, they still had that 2 green arrow signal on it. Okay. All right. So let's take a look at BAC. Now, because I have these linked up, this is another little cool trick on Thinkorswim. If you have, you link up your watch list with your chart up here, then when I scroll down, or if I click on this, it'll automatically change the screen for me. You guys see that? I think that's kind of cool. All right. So BAC, again, as we go through this daily routine, when I first learned how to do this, it took forever to do that. But I didn't really understand what I was looking for. So in this part of our daily routine for our class, for this example trading strategy in this sample set of rules, we are just looking for one thing, okay? Are there two red arrows? Okay, that means is the stock price below the moving average, and is the MACD or is the MACD red? If either one of those is no, if the stock's above the moving average or the MACD is still green, guess what? We're done with our analysis. There's nothing left to do really, okay? The only exception would be is if the MACD had been red and it's green again. And we'll, we've talked about that many times already, but if you get a new green arrow, then we can move our stop up from wherever it is, all right? But how about here? Now, we're just gonna focus, I'm gonna go through these next ones a little bit faster, but do we have anything to do on BAC? Nope, the answer is no. Stock's above the moving average, that's green. MACD's green. We're done with our analysis, okay? How about if I go to C? How about C? Stock's above the moving average. MACD's still green. Do we have anything to do today? Nope, we're done. All right, Cisco. Now, Cisco fell pretty hard today, down 2%. MACD's green. Stock's still above that rising moving average. Do we have anything to do today based on the rules of our strategy? No, we're done. Nothing left to do here. All right, how about CVS? Now, CVS is interesting because we got some red arrows over here earlier and the stop was adjusted, and this is where the stop is. Now, this is another nuance that I think is important. A lot of times when you start get that arrow, most traders and investors understand that that stock may bounce around sideways for a little while, so they'll just leave that initial stop adjustment stop there. And they don't really act too much on the green arrows or the red arrows that are after that until the trend resumes. Okay, that's an important concept. So even though we had a two red arrow signal on this day, that's lower than it was over here, so we wouldn't move the stop down. And then we got a new two green arrow signal here. There was really no resuming of the trend, right? We're just in this little channel here. And so we're going to let the stop that we currently have just do its job, which will get us out. If this trend keeps going down, if it breaks support, it'll get us out and we'll have a loss because we got on this one here. Okay, this was a little bit later purchase. All right. So again, as you go through these with me, your question is do I have anything to do today? As we look at GILD, okay, GILD gave two red arrows back here. The stop was adjusted. It bounced around. And here's another one where like the trend hasn't resumed. It's chopping around sideways. We don't know how long this is going to chop around like this. We're in a loss position because we bought this one here when it broke the resistance and the trend hasn't done very well for us. We're losing money on this one, but there's really nothing to do on this one either because we've adjusted the stop already. All right. If the trend resumes and then it gives two red arrows again, then we'll adjust the stop up. Or if it starts breaking out again, we'll maybe use that two green arrow signal to adjust the stop. But right now, there's nothing to do, okay? How about J&J? J&J has been one of the fun ones. We're going to come back and look at this one. So J&J, is the price above the moving average? Answer is yes. MACD's green. Do we have two red arrows? Answer is no. Do we have anything to do today? Nope. Now, we did get a new buy signal just a few days ago over here. And what could we have done right here that I want to show you how to do? What could we have done right there? Let's go back one day over here. Like right there, you can see the MACD is still red, right? Let me get rid of this crosshair. So we wouldn't have done anything that day, but if I move the chart forward just one day, you can see here that we actually gave a green arrow. If we didn't own the stock already, what could we have done? Was this a valid buy signal on this day, the 12th of December? The answer is yeah, it is and was. So if we own the shares already, then the rules that we created said we can put our stop 1% below the moving average. Now on that particular day, if you look right up here at this value right there, but that particular day, the moving average was at 195.71. So let's go ahead and move our stop up on this one, that 195.71 times 0.99. So let me grab my calculator. We're going to take the moving average value again, which was 197 or 195.71 times 0.99, and that gives us the moving average, or our stop value, 193.75. So this is really cool. Another little trick on Thinkorswim. I can just left click on this and drag it on up. And you can see the numbers changing there. And what do we have? 195.70. What was it? Grab the calculator again. So 193.75. So I don't really worry too much. I just try to get it close, and then we're going to click edit. And we said 193.75. All right. Now, Scott, you had asked about, some of that morning volatility and having it, go down, hit your stop, and then by the end of the day has that really big green candle, right? Let me show you a trick. Again, let me shrink my limit size down. If you're adjusting your stops, this is a trick that you can use to help avoid some of that early morning volatility. The advantage is that you may not get picked off if it goes down first and then rallies and ends up with a big green candle. The disadvantage is it might go down and then just keep going down. And rather than getting stopped out at 193.75, it's closing at 192 or something way much lower. Okay, but this is how you do it. If you put your cursor up here on the order, see that gear there at the end? If you click the gear, then this little order rules window will come up. And you can say, you know what? I'm going to avoid the morning volatility. And so the market's closed right now. So we're going to change the date to tomorrow. And we're going to say, this is your local time. So like we're mountain time here where I am. So the market closes at 1400 hours. And so if I wanted to say, avoid really the whole day volatility, and only if this is below 193.75 at the end of the day, that last 30 minutes, then sell it for me on a stop, which means it'll trigger a market order. And again, it could be considerably lower than this, right? It could be 191, it could be 180, who knows there. But this is a way, and if you just wanted to avoid the morning volatility, the market here in Utah opens up at 7:30. So I could say, you know what? I don't want that stop to be active until, 8 a.m. or this would be 10 a.m. Eastern time. And so you avoid maybe that first 30 minutes of the market day. And if it's still below your stop at that point, it'll just, kind of execute that market order and you get filled at the next available price, which again could be considerably lower. But that's a method that you can use. You click save, and then when you hit confirm and send, it gives you a chance to review the order. Sell 2 of those as a stop at 193.75. That's the stop trigger, but don't submit the order until tomorrow morning at 8 a.m. Mountain time or 10 a.m. Eastern time. And then we're going to go ahead and send that off. So now we've adjusted the stop up because why? Well, because we have a new 2 green arrow buy signal on that one. All right. So let's take a look at Johnson & Johnson. I do want to come back to this one because this, if you notice, looks really interesting, right? It looks interesting on how the stock is setting up. Our old resistance is right here. And what do we know about old resistance? Well, old resistance might, not always, but might become new support. And we have that little bull flag price pattern forming up here. And another thing, this is a little technical trader nuance again. Another thing technical traders like to see when the stock sells off is usually these little candles. That's called a spinning top when it has a small body with wicks or shadows on both sides. We call that a spinning top. And sometimes when we get those, it means some of that maybe selling momentum is drying up, and it looks, we generally look for those near support areas. And sometimes if it's down there, that might be an indication that this is going to bounce back up. No guarantees, obviously. But if we have time, I'll come back and I want to place an order on Johnson & Johnson to show you how to buy this if it bounces, not if it keeps going down. But if it bounces back up, I want to show you how to get into that trade. Let's take a look at these others real quick. Okay, 3M. 3M, we got 2 red arrows yesterday. The low price that day was 162.84. If we take our calculator, so we need to adjust the stop on this one, 162.84 times what? Okay, times 0.97. This is 3% below that low price. We're going to give the stock some wiggle room. but we need to move the stop to 157.95. And I think that's where I put this number or this line already. So help me remember that. 157.95, we're going to grab our stop, left click, drag it up. 157.93, we hit edit. We'll bump it up 2 cents. Still stop good till canceled. It's in our right group, and it's a stop order. Again, no guarantee it gets filled at 157. That'll just trigger the order. Might get filled lower than that. We send that off. And now we've adjusted our stop. And if it keeps going down, we're going to get stopped out. All right. So let's take a look at MS. MS. Okay, this is kind of interesting. Very similar to what the market's doing. Stocks above the moving average. The MACD did turn red a couple of days ago, but that's just one red arrow. Do we have anything to do on MS? Nope. And I'll throw this out there because we have some stop orders down here near the moving average. And, you know, again, the question I had when I first learned this is like, wait, you're telling me I'm going to wait for $9 more to go down, and then I'm going to get stopped out and have a $9 bigger loss than I have right now, or less gain than I have right now? Yes, that's the answer. Yes, that's the whole point of trying to trade the trend, is you have to be willing to let that pull up and down in order to stay with the trend. You can see this has lots of times where it's come down, hit the moving average, close below the moving average. But all along, we bought this 3 times now in our paper money account. And so, you know, we're in a profitable position here. We actually took some profits over here. This was from our discussion last week. We decided, well, we're going to take some profit on some of it if it goes down, and it did, and we got stopped out of some of it. But this stop essentially says I'm willing to give up another $9 per share on this position because that's where my stop is. Now, could we employ some of the things we talked about last week? Sure. But, you know, prepare on MS. Old resistance is down here. This could pull back another $4 or $5 pretty easy, and it would still be in a nice uptrend. All right. So nothing to do on MS. MU. MU, interesting. Red arrow on the MACD, but it closed above the moving average. During the day, we had 3 red arrows. Look at that. It went down below the moving average, but closed back above. So we don't have any adjustment as of today. Maybe tomorrow, but as of today, nothing to do. NVIDIA, just ugly. NVIDIA kind of broke down the support area here. We have our stop down at this level. It looks like we have an intraday low right there. It's trying to hold that today. We'll see if that continues to go down, but our stop is over here. And I think that was based on, you know, 3% below one of these red arrow candles. I don't remember, or 3% below support. But I don't remember on that one. Okay. So really nothing else to do here. We've already adjusted the stop up. Pepsi's above the moving average, green arrows. Technically, that's a valid buy signal on Pepsi based on our rule set. You know, but it may keep coming down. It's a little bit older, you know, 5 days since the green arrow. And it did just recently break through this little area right here. And so that might be the new support area. We just don't know. Okay, but that one, again, technically, rising moving average, 2 green arrows. If we didn't already own this one, this is another one that has a valid buy signal on it. Okay, RTX, similar. You know, this one's chopped around quite a bit. Closed below the moving average a couple different times. We've moved the stop up. Green arrow on the moving average, green arrow on the MACD. Again, nothing to do in our rule set today. And this is another one that has a valid 2 green arrow, although a little bit late buy signal on it. Okay. And we'll come back to J&J here in just a minute, and I'll show you, you know, what I mean by placing an order to get in if it bounces. All right. SPX, we don't need to look at that one. WFC. You know, really nice consolidation, broke out nicely on the 3rd, going up 2 green arrows right now, nothing to do on this one. And Walmart, same story, nice breakout. MACD's red, but the stock's still above the moving average, really nothing to do on this one either. All right, now I do see some comments in here. Brent's looked at, answered some of those. Some of them are a little bit long to look at just real quickly. But if you have some other questions, you know, chat those in. Looks like MU had an earnings just come out. Let's take a look real quick at that one. They were announcing after hours. So this is kind of cool. This is another little nuance on the Thinkorswim charts. Check this out. The close on MU was at 225.52. Right now, it looks like the market is up $10. You see that bid and ask right here? It's a little hard to see that, but the market on MU is trading at 235 right now. So it looks like they probably had a good earnings, maybe beat expectations. And right now they're trading. Now it won't necessarily be there tomorrow morning, but right now it's $10 above the close. All right. All right. Last thing I wanted to do today is go back to Johnson & Johnson. This is one that has technically a valid buy signal for our rule set because the green arrows are still green until they turn red. But I wanted to show you a little technique here for this new purchase because we don't know if the market's going to go down or up tomorrow. And so this technique is called a buy stop order. And the idea with a buy stop order is to buy it if and only if it starts going back up again. So if it keeps going down, like it did over here, you know, if it keeps coming down, we can just keep adjusting the order down as long as our buy condition is satisfied. So our buy condition means 2 green arrows, which is above the moving average, and the MACD being green. And we do have that right now. But let me show you this technique. And usually, and traders will do all sorts of different ways of doing this. I'm going to use just a generic 20 cents. If it trades above the high of this low day, the stock pulled back, consolidated a little bit. Today's a little bit lower than yesterday, so today's the low day. If the stock trades above 211.52 by 20 cents tomorrow, that'll trigger an order to buy some shares, okay? And, you know, we're investing about $500 per position in this portfolio that we're trading. It's a kind of a $10,000 mock paper money portfolio. And so we're going to put an order to buy 2 shares with our buy stop entry price at 211.72. And then we'll set our stop 1% below the moving average where it is now. And this order will be good for tomorrow because the market's closed right now. But the moving average right now is at 197.07. So let's grab our calculator and show how to do this order. So 197.07 times 0.99. That's the moving average, 1%. So 195.09. I'm just going to write that down so I don't forget. So 195.09. Our entry, again, is 211.52 plus 20 cents. So let me show you how to do that. We're going to right click just right here on the chart, buy custom, and we're just going to use a stop. We won't have an upside target on this one. And so we're going to buy 2 shares. We'll lock that link up. Let me make this a little bigger. So we have 2 shares. So we're going to invest up to $500. If we did 3, that'd be too much. And it's not a limit order. You know, if we put a limit order in there above today's high, right, 211.52, 211.72, we said for our entry trigger, right? If we do a limit order at that price, it's just going to fill anywhere below that. And we want to say, Mr. Broker, don't really do anything. Stop until this hits 211.72 and then send off a market order. Well, that could be kind of scary. What if it's up $10 a share tomorrow like MU is right now? Well, let's do a buy stop limit order. And again, people use different amounts in here. You could put $1 above, or you're basically just saying, what's the maximum that you want to spend on this? So we'll go, I usually add in another 20 cents. So like 20 cents above the high of that low day for the trigger, and then another 20 cents for kind of the little small window that it has to trade within in order for that order to fill. Okay, we'll make that good till canceled. Our stop, we said, what was where? So let's grab our calculator. I said 195.09. 195.09, and we want that good till canceled. And now we have an order that will get us in. If the stock bounces, we're going to be in the trade. If it opens up above 211.92, the order won't fill. So just be aware of that. It'd have to go back down below 211.92 because that's the most that we're willing to pay. All right. And so I want to put this in that 2 green arrow group of ours. We have our stop order. We've talked about how that stop works. No guarantee to get filled at 105.09. Okay. And send that order off. And now we kind of have a buy stop limit order with a stop that will be activated only after the buy happens. All right. So let's see. Question here from Curious says, I'm new to the class. Which video is the beginning of the series? So let me, I've done what I wanted to do today. I wanted to go through all of our holdings. We've done that. I wanted to show you how to, identify the buy signals, which I've done that, with the green arrows and above the rising moving average. I wanted to show you how to do this buy stop limit order on Johnson & Johnson. Let me go through and show you a couple other things here. So Curious, if you go to the Trader Talks webcast, so I'll chat this into you here in the chat. I think Brent may have already done that. But if you just scroll down, right on the home page, we have our whole series right here, Stock Investing Basics, lesson 1 through 8. This is just right here, and you can start on lesson 1 and watch those videos. The other thing I wanted to show you is that we have if you're in the Miami area, we have a live event. It's on advanced options. Options aren't suitable for all investors, but we do have a live event going on in Miami this weekend. If you're there, go to our Schwab Coaching Live Events page and you can check that out. But that's an answer to the question there from you are Curious. Let me see if there's any others. Thanks, JDML. Appreciate that comment, or JDL there. All right. Well, let's go back to our Thinkorswim page and we'll just wrap up there. A little bit tougher day in the market today. Market pulled back. We gave back some profits on a lot of positions. A lot of our positions are still positive, but we gave back some profits, which is pretty typical of this longer term type of investing strategy. For homework, what I'd love to see you go do is go through, your paper money trades and just see if there's a stop adjustment there. If you want to practice some of those buy signals, we talked about a few of the stocks today that had, 2 green arrows based on our rule set. Again, no guarantee that they'll be profitable, but, has a valid buy signal based on our strategies. If you found this helpful, please subscribe. That's like a pat on the back for us over here at Schwab to see that. And, hopefully this was helpful for you. Have a great day. And if we don't talk again between now and then, happy holidays and Merry Christmas to everybody. Really appreciate you taking some time today to be with me. Have a great day, everybody. We'll see you.